What's going on out there? It's Tuesday, July 5th. I'm Frank Curzio, the Wall Street Report podcast, where I break down headlines and tell you what's really moving these markets. Hope all of you had a great holiday weekend with the family. Celebrate Independence Day. Though it seems like every single channel you turn on, everything you read, it's people that hate this holiday. They want to tear down these statues of the people who helped build the foundation of our country, claim that it's not free, it's terrible, which is ironic given that you could actually say this in public and you have the freedom. You can even write stories about this and get published on the major sites. You should have seen was some of the major sites and ESPN, stuff like that, some stories. You think, oh, it's going to be happy time, baseball. No. No way. But the fact you can say this in public and not get thrown in jail or beheaded. I mean, imagine saying some of this stuff in Russia, North Korea, China. Publicly speaking out against your country. But crazy times, man. I can't believe how many people it just seems to hate our country. I know it's not that many, but that's what gets published, and then you have it being funded by some of these big companies now. And again, it's ironic because these people I hate will never ever leave. They'll never leave. They can leave very easily. You can get the hell out of this country, go someplace else and bitch. Believe me, it'll be great for everyone. No way, you'll never do that. No, This bitch about everything they don't have, how everyone needs to adopt their beliefs, or you'll be labeled as a supremacist, racist, you're evil. Again, you have to believe exactly what they believe. You can't disagree with them. Or you can't even agree with them. You can say, hey, I believe in gay rights, I believe whatever side of the it's not good enough. No way, that's not good enough. You have to make your kids gay. You have to. It's crazy. I mean, it's crazy out there. Like the agenda just gets pushed and pushed, but this is what's getting published. This is what's in the media. This is what you see every day, and it's sad. I mean, independence, you know how many people fought and died for our country to make it so you're allowed to say whatever you want and do whatever you want and be whatever you want? Holy shit. Like, what kind of history is being taught to these people? Anyway, so many people, not everyone. Obviously, most people were having fun. They were bitching, protesting. I enjoyed a wonderful weekend with the family. Actually, went to a concert with my wife. This was Friday. And it was Motley Crue, Def Leppard, Joan Jett, and Poison. And I got these tickets 2 years ago. And it was canceled due to COVID. So it finally got rescheduled. And of course, it rained. And it was downpouring at times, like a steady, steady rain for about half the concert. And I have to tell you, I couldn't believe how crowded it was because they have Jacksonville Stadium, which is a TIA field, used to be called Everbank, which is massive, right? So you have these big concerts at. And then you have this other place called Daly Place, which is really awesome. It's about 25% of the size. You can sit anywhere. It's great. You're up close. It's awesome. They have a lot of concerts there, but this one was at Jacksonville. So, we had floor seats. A lot of people have floor seats, and there's one big entrance to get there. And there was 1.5 feet of water in between to get there. That's how much it rained. So people's jeans, everything was wet. We wore ponchos and everything. We took them off. It was great. I just couldn't believe how many people were there. It was crowded. Everybody going crazy. Music was fantastic. It was just awesome to see so many people having a good time. And when it comes to Motley Crue, basically the headline, it's not really my thing. My wife loves Motley Crue, so I got the tickets. And, she's seen plenty of concerts of people that I like. So I said, let me do this. And it's just, again, 2 years ago, finally, they rescheduled and were there Friday. But there's a lot of strategy that goes behind planning one of these rock concerts or going to see a rock band that your wife likes. So first, when you're seeing someone like Motley Crue, you can throw the Rolling Stones in there, Def Leppard, older rock bands, right? Brings back all those memories for your wife. When she was young, partied all the time, no kids, no responsibilities, so much fun. And the women get dialed up like it was the 80s. I mean, they look good. Talking 56-year-old women, nice outfits, makeup, dark eyeliner. They're drinking, having a good time. And even the guys had long wigs on, right? Dressing up like the band members or how those band members used to look like 30 years ago. So when you go to one of these rock concerts or any concert with average age of the band that you used to listen to is 60 years old now, right? What we did, we get a babysitter for the night. When you get home, it's usually a really good time. But this concert, it was delayed an hour due to the rain, and then it started around 5:30. It was supposed to start at 4:30 and ended close to midnight. So we got home after 1. And that's not good for people my age because you're drinking for the better part, not for 5 hours, but you're drinking. We pretty much stopped at 10. But usually concerts are 2 hours, 2.5 hours, maybe you get one for 3. But this long with this many bands, it stretched out tremendously. So, you're getting a little tired. You're standing the whole time. You're having a good time. But our age, it's not good, right? You get really tired. Plus, it takes about 3 to 4 days to recover now. When I used to just go right out the next day and have fun and everything. Just, man, if you're young, enjoy your life because, things definitely change when you get older. But anyway, the master plan was to go to this great concert, get my wife a little toasted. She goes get to see Nikki Sixx, Tommy Lee, and when we get home, it's a party. But it all backfired as we got home after 1, and we both wind up passing out. So that's the life of 50-year-olds with kids. But everything needs to be planned out that age. You do the homework. When it came to this, we planned a concert, the babysitters, good seating, drinking, execution was great on my part. But I can't control the rain. So you're playing something like this, when you look at it, it has its risks, right? Things can still go wrong, similar to a stock. The stock that you research, they check all the boxes, this is great, going to invest in, and it falls 30% because of something you forgot to calculate. I forgot to calculate the rain. That was my fault. Anyway, we had a fantastic time, and I'm making a joke of this. It was an awesome concert. I mean, Bret Michaels was great, came out. He's like, I'm going out in the rain. You guys are Florida. You show up no matter what. And just everybody just having a really, really good time. But I had an awesome weekend with the family. Hopefully you did too. And now it's back to work. And we get in, and what happens? The markets are under pressure. The Dow right now is down 700. I'm doing this around 11:15. We are seeing some technology stocks doing well, but Europe now is taking center stage because they're talking recession. I don't know if you've seen the euro because it's close to par with the dollar. I think it's something like a 20-year low, whatever it is. And yes, we're talking about that dollar, right? It's supposed to lose its reserve currency status. Some experts are predicting since 1975, every single year, get out of U.S., you got to put your money, get the hell out of it. Everybody goes to the dollar when shit like this happens. It's the safest thing in the world. You might hate the dollar, but it's a billion times better than every single currency out there. So, saying that Bitcoin isn't a currency, but even Bitcoin, with all this nonsense, with so many different places folding shops and saying that we're halting withdrawals. I can't tell you how many platforms there are that trade cryptos that are halting withdrawals right now, which is really scary. So people are just taking their money off of these platforms, even the good ones, and it's resulting in more and more. So, again, it's going to result in weakness for a little while until it ends. But we've seen this before in Bitcoin, down 70% 3 other times before breaking it to new highs. But let's see. I mean, I know institutional money can now go into this thing, but man, it's been crazy, even not just in our market, Europe, and globally, which every asset class is basically down, every one. But even in Bitcoin, things like that. Like I said last week, most economies are going to fall into recession. And we're talking about it like it's the end of the world, right? You can't. It's exactly what the Fed is trying to do. They can't say it publicly, right? But when you're raising rates aggressively, shrinking your balance sheet, it reduces the money in the system, promotes less spending, fewer loans. So to say we're not going to go into recession, it's basically denial, and it's political, right? You don't want, as an acting president or Fed chief, you never want to have a recession under your watch, under that belt. Which explains why everywhere we look, there's so much, we're not going into a recession talk, or we're going to avoid a recession, right? That's, you see it everywhere. We're probably going to avoid it. I mean, does it really matter? I mean, ignore it. It's just a word. It was a normal course of business before the credit crisis, where every 4 to 5 years we fell into recession, which is normal. It wasn't the end of the world. 15, 20%, 22% decline, and everything readjusts. You get the shit out of the market. Then you move to new highs, more innovation and stuff like that. I mean, it was normal, but we didn't allow that for such a long time. It kept interest rates low for such a long time. Now you're seeing the money pour out of the market, come out of the market, especially since COVID, where trillions was injected. But when we officially go into recession, which could be right now, and I mentioned this on Twitter, how there's good data sites out there that are saying that we're going to see a negative GDP print, which would be 2 in a row, which is surprising. I think it was 2%, fell to 1%. I think the consensus is still for around 1%, 0.8%, but these guys try to do it in real time, and they're pretty accurate, not accurate all the time, but again, I covered this last week, showing that, I don't know if I did for Frankly Speaking or actually in a segment, but it gets revised, right? You get revisions and a lot of this data, and you get 3 different revisions, right? Because it's quarterly data, GDP, unemployment's monthly, but GDP is quarterly, and then it gets revised 3 different times. And last month was revised from 1.6 to 1.5, right? So negative. So if you're looking at this quarter being negative as well, you got to be careful, because that's the definition. And when we see the definition, or we actually say it out loud, I think it's going to be the ultimate bottom, and we're pretty close. So I'm still buying stocks here. People are like, Frank, I'm worried. And I get it. I know the next 3 months are going to be horrific. But it's going to be horrific from a headline standpoint. Many countries are going to announce they're going into recession. They talk a great deal about it. You're going to see defaults. Going to see another big rate hike later this month. 75 basis points likely, most likely. Taking the Fed funds rate up to 2.5%. We're going to see earnings warnings. These companies are going to start reporting in about 2 weeks, but about 3 weeks and 4 weeks is when we really get into it. But it's going to get ugly, especially from a headline standpoint. With that said, take a step back and look what's going on. The S&P 500 is already down 20%. The Nasdaq's down, what, close to 30%? Look at the Russell 2000 small caps trading at its cheapest level in over 20 years. I can't go back further than that. You can, but it just gets, again, 20 years compared to now. But you have banks raising their dividends and increasing buybacks, which is a very good sign that we don't have structural problems like we did in the credit crisis, which you didn't know what the damage was. Would banks be able to lend? They had to shore up their balance sheets, get bailed out. It's not like that now. Most importantly, if you look at the Fed tightening, raising rates, doing everything they can to slow inflation because they were late to the party, I'm not going to pick on the Fed again. It's working. It's working. And they're not mentioning a lot of that in the media. They're just talking about the negatives and everything. You go on Twitter, you go on your favorite social media platform, tell you, get the hell out, we're dead, it's over. You got to look at the big picture here. The Fed's doing everything it can to control inflation, and it's working. Have you seen copper prices? And they're getting smashed. 17-month low, they're below 350 now. Look at Freeport. Freeport's down another 7%. A lot of these stocks getting crushed. Look at lumber prices, now down 70% from their highs. Mortgage demand falling off a cliff with rates surging. If you want to borrow money, it's much, much more difficult. It was difficult before that. Oil prices closing at $100, down 30% from their highs. $100 expensive, yes, but they're down. That's what we need to see. And look at the gas pump. The gas pump in Florida, prices are down about 15% a gallon in the past, couple days, few days? I was surprised to see where it is. It's in 430 prints when it was I didn't see 5. I saw 499 a couple of times. It was basically above 485 for a while. And for us, it's close to $15, $20 savings for our SUV, which we fill up twice a week because all the driving we do. It's why we're moving to Jacksonville for our kids. So $4 in savings a week, $160 a month. It adds up. It adds up for everybody out there. And of course, we need prices to come down a lot more, but my point here is that we're seeing signs of prices not just moderating, which we wanted to see, and it didn't really show up in last month's results. And remember, that's a month lag. And that's why the market took another leg down. But they're not just moderating. They're starting to fall sharply from their highs. Retail is sitting on 35% inventories? Which is insane. And what are you going to do when you have that much inventory? You have to sell low prices. Well, the market's down. Interesting enough, Arc Innovations is up today, which owns Datadog, Roblox. You've seen Amazon, even Meta up, Netflix. But a lot of encouraging signs since we hear all the negatives every single day for the past 4 months. I'm not sugarcoating things. I'm not telling you things are fantastic. I'm not telling you things are going to be fantastic from here. It's the bottom. You got to buy it. Go crazy. No. I said I'm buying stocks here. Because the negatives that we hear, lower lows for the major indices, we're in supply chain concerns, rates surging, middle America hurting, Russia-Ukraine war causing higher energy prices. We hear that. We keep hearing that every month, week over week, almost daily, for the past 4 months, 5 months. Again, a lot of it's being priced in with the markets down so much. But if you look at certain things, like some of the things I mentioned with prices coming down, look at the 10-year. The 10-year is at 2.8%. It's important, guys. Watch the 10-year. This is very, very important. And what was it, 3.3% recently? I thought it was last week. So it's down to 2.8%. That signifies that future interest rate hikes are being priced in. The Fed may pause sooner than expected. That's what that says at 2.8%. And that's huge. Remember, gas prices going from $5 to $4.30. I mean, it's not a game changer. It's not massive since gas prices were, $3 a year ago. I get it. And that's an argument you're hearing now. Well, inflation is moderated, it's coming down, but still, it's crazy. It might fall year over year because it's up so high, but still, you're going to be paying $4.50 for gas for $5 and it was $3. I get it. I understand that. And you're right in saying that. However, I'm talking about the markets here. And it's something I know because I've been doing this for a long time because I made millions of mistakes. But the more we see the economy pulling back, right, the more we see prices fall, especially with commodities, which we're seeing, the less aggressive the Fed will be in terms of tightening. And if the Fed even hints, if they hint at slowing the pace of rate hikes, which we're going to get the Fed minutes tomorrow, and they're going to talk about inflation, how crazy it is. Again, that's what they want to do. But going to next month, it's going to be interesting. Because what are they going to do? They're probably going to raise by 75 basis points, bring it up to 2.5%. I have a feeling either then they're going to say, hey, we're going to look out and watch and see what's going on. By the way, what's pricing in right now is a 50 basis hike this month. I believe it's going to be 75 basis point hike. And what's also being priced into the markets right now is we're going to be cutting rates next year. Think about that. I mean, if we're cutting rates, it's a much better environment, and that's a year from now, and we're seeing stocks down tremendously. Again, it can go down further. But the Fed even hints at slowing the pace of rate hikes, which they could do in September. The markets are going to surge from these levels. That's how the price is. Especially great names are down 30%, only because they're in an industry that's seeing aggressive selling and outflows due to leveraging and everybody covering. There's a lot of great names that shouldn't be trading at these levels. Not all of them. Look at the Curzio. You're right. Morgan Stanley came out with a note. Carnival's not going under anytime soon. But, guy wanted to get his name in the paper with a zero target. If we have another demand shock, which, of course, if we do lockdowns, of course, there's going to be businesses that go under. And Carnival will be one out of 1,000, okay? It's just funny. Again, you got your name in the paper and everybody mentioned it all day. I get it. But they lowered their price target because of the debt. And they do have a ton of debt. But if you look at the other cruise lines, their debt is not a concern. They're fine. Their balance sheets are much better. They're going to generate strong cash flow. They're going to generate, their earnings and revenue is expected to surge. You're looking at demand. Just look at demand now. People going to cruises, again, 50% cheaper than flying, going on other vacations right now. It used to be a 20% difference. It's about 45 to 50%. And people tracking this data. So not all cruise lines are the same. Not all airlines are the same. Not, all technology and cloud companies are the same. You're going to see separation between the ones that are good and the ones that are shit that are going to fall off. They were able to get that premium because they're expected to grow, 300% over the next 5 years. Well, that's out the window now. Now these are young companies going through their first downturn. You got to cut costs. The good companies, the Microsoft, all these guys that lived through the dot-com bubble, the credit crisis. So many new companies have come out since then. But they have everything on schedule. They know exactly what they're cutting. If this happens, that's how much we're cutting. This is a section we're cutting. These are the people. They have it all planned out because they've been there. And a lot of these companies almost went under. Netflix almost went under in 2000 and 2003. They were begging to get bought by Blockbuster. Begging at the time. Look how that worked out. Look what Blockbuster is. Look what Netflix is. Yes, we're looking at Netflix down a lot and coming down. But, you're talking about a company that's one of the biggest in the world. You're talking about just a few $1 million in extra cash on your balance sheet could make the difference of you not being around today compared to being a $300 billion, $500 billion, $700 billion company. It's crazy. So there's a lot of companies that have been cutting back and they're still growing. Still seeing insiders buy. And a lot of positives there. So I know when you look at your 401ks, you want to puke. I get it. Watch your financial media channels, read the Wall Street Journal, Barron's, IBD, whatever. It looks extremely scary. And you're ready to just say F it and throw in a towel. I get it. You know why? Because I feel this way too. I see it. I'm like every freaking time. I'm like, are you kidding me? Are you kidding me? This isn't priced in. Are you kidding me? But I've also felt that way in 2003, in 2010. I didn't get in the market earlier than I should have. Even in April 2020, when I covered COVID, got out of the market, I was still extremely, extremely bearish. And it took me another month or so to reevaluate and say, we have to go all in because I had no idea the government would say, oh, we're not going to spend what we did on the credit crisis, $480 billion. No. We're going to start with $5 trillion and then we're going to keep going. to 7 trillion, to 9 trillion, to 11 trillion, 52% of GDP. That's how much was injected. And then everything reopened. And everybody was like a millionaire all of a sudden. Now you take a lot of that money out of the markets, and a lot has been done already. But for me, I felt that way in the past. I made my mistakes. But when I felt that way, what I feel like I do now, like you do right now, it's usually a sign that we're close to a bottom. And it almost always results in a huge buying opportunity because you're able to pick up amazing assets at 30 to 50% discounts, which you cannot do unless you have crazy markets like this that come around not often. Yeah, we saw 2020. It seems like it was quick. Before that, it was 2009. But we saw something like this. Before that, it was .com. I mean, we had 87 before that. But, these massive moves in the market where you're getting these opportunities to buy these assets. I mean, I think it was Zero Hedge came out with something. It was an interesting article how the guy from FTX could be the first trillionaire if crypto bounces back and becomes the industry everybody thinks it, because they're buying all of these freaking assets of all these assholes that leverage themselves at dirt cheap prices. Amazing deals for them. I mean, look at all the private equity firms. You wonder why they're in such great shape, because they were one of the few in America and even around the world that were able to buy those European assets during the credit crisis when banks, they passed laws that said you have to shrink your balance sheets. Okay, you have to sell these assets, but they're fucking 10 cents on a dollar. It doesn't matter. You got to sell them. And they had the cash and bought all these assets, and look what happened. I mean, have you seen the balance sheets of these companies? Holy cow. Go to private equity. Look how much dry powder they have. Look how much money they generate. Look at the dividends they pay. And this is the market that they love. They love these types of market. And they're not looking at, 3 months. It's going to be a shitty 3 months. They're like 18 months from now, we're going to be in really great shape. When the Fed starts lowering rates, a lot of these companies are going to go bankrupt. The banking system is perfectly fine. It's healthy right now. I mean, holy cow. How do you see a recession when the banks are buying back their stock and raising their dividends? They have so much cash, they can't do anything else with it, right? That's good. Again, you got to get inflation out of the market. It's working. But you don't get a chance to buy these great assets at fire sale prices often. But here it is. This is the market. And if you buy, you may not do it at the absolute low. Maybe you scale into your stocks or whatever. I mean, nobody's going to buy at the absolute, sell at the absolute high, even though they tell you that in all the trading systems. I bought here and sold here, and this is how you do it. Just look at this signal. Yeah, I know. I don't know if it's me. It seems like every 6 months, there's another 40 of those that pop up, and then they go out of business. Another 40, they go out of business. Another 40. You never see like the same trading services that they're pitching and offering and all this stuff. It's never around for like 10 years, right? It's always like, hey, where'd those guys go? It's awesome. Just buy right here, and they circle it, and sell right here, and they put up a chart. It's funny. Doesn't happen. Almost never happens. If you're willing to buy and hold stocks for 18 months or longer, if that's your time frame, which most of you do, your 401k, retirement accounts, whatever, right now is a fantastic buying opportunity. Be prepared to hunker down. It's going to get a little worse over the next couple of months, but the Fed's going to raise rates in July, and that's going to be interesting to see those minutes, because they're going to say we're seeing clear signs of moderation of inflation, and it's going to come down a lot quicker than anyone believes, because it's set up as a massive wall, and you keep approaching it, and it beats you down. Go up there, beat you down, beat you down. It's there. And the Fed right now is doing everything it can. You don't want to say to force a recession, but to take money out of this market. So it's going to force recessions around the world, a lot of different economies. That's fine. We're almost there if we're not in recession now. But you have to look at where stocks are. NASDAQ, 30%. Seen some of these names, IPOs down 70, 80% from their highs. Biotech's down 70, 80%. We're close. We're close. When companies are trading close to cash, when the Russell 2000 has more companies trading their cash than in the history of the index. And that's a fact. We're close. So from a risk-reward standpoint right now, again, when everyone's negative, everyone's crazy, they're saying the same shit that we said 4 months ago, 3 months ago, 2 months ago, they're starting to say it now and go crazy. That's the time when you want to start adding to positions, getting into your positions here, even scaling in, because there's a lot of great names. Great names. And while everyone's pissed and wants to hide under the bed and doesn't want to look at their 401k, start doing the homework. Be smart. You find a ton of names paying solid dividends, raising these dividends, reporting solid growth, trading at cheap levels historically, almost cheap levels that they've traded in decades, where insiders are actually buying hand over fist. When I say insiders, I'm not talking about 10% holders that have other people's money. I'm talking about CEOs. CEOs already have big positions in these companies, and they have a lot of money, and they're using that money to buy their own stock. CFOs, people who are part of the company, that's what you're seeing right now. More insider buys than any other time since 2009. That's telling you something. Those guys are wrong at the beginning in 2009 when they started buying in January. That was the peak. Because from January to March, we saw another major downturn, and it bounced back really quick, and then we were off to the races. So those guys happen to be right. They're wrong at the beginning, but they don't care about the next 3 months. You shouldn't care about the next 3 months. You're a trader. It's different. I can't tell you. 3 months, it looks ugly. It looks terrible for 3 months. But when I look 6 months out, I can't see the Fed raising rates. They're done. They're done. 10 years saying that right now, under 3%. And there could be other events, and maybe we see something else. There are people that are cutting back. You see it. You're going to see it around. You're going to see it at restaurants. They're not going to be as crowded. Maybe the weekends are still crowded. In the weekdays, I'm seeing it here. I'm seeing people cut back. More people shopping at Publix and cooking than ever. And now you're seeing gas prices, copper prices, lumber prices, homes. Again, you're starting to see this fall. Retailers with inventory, you're starting to see it. Look at Kohl's, horrible quarter, just like the rest of them. Let's see what happens on Prime Day with Amazon. What's Amazon going to do on Prime Day? It's going to tell everyone that they serve, lower your prices. Lower your prices. That's what we need to see. We're seeing it right now. We're almost there. You won't catch the bottom. But I can tell you, 18 months, you can almost buy any name you want. I won't say that any name you want because some of them have horrible balance sheets or in trouble. But they're probably going to be a lot higher 18 months from now. And you'll thank me. You can buy me a beer when you see me. And speaking of buying me a beer, if you want to buy me a beer, which you don't have to, I'll buy you drinks. But I'm going to be in Vegas. I'm leaving here Thursday. So our conference, it's Meta Expo, is Friday, Saturday, Sunday. It's sponsored by TCG, which is a company we made our big deal with and bought $5 million worth of virtual real estate in. We're going to be presenting as keynote speaker. It's going to be on Saturday, I think. They got me in at 2:45. It's going to be a half an hour speech. It'll be fun, interesting, but I have a lot of people asking about it. They're going to be attendance. You can go on our website. It's a 50% discount for tickets. I think it's like $99 or something for the ticket instead of $199. And it's 3 days of conference. So it's pretty cool. It's going to be a little crazy. You can see a lot of metaverse stuff and everything. But more importantly, if you do go there, be sure to say hi. We're having a booth. We're going to be interviewing a lot of the members who own real estate in TCG, metaverse people. Again, we're going to have some really great interviews set up. You guys are going to see all that content later on, weeks ahead. But you're going to see me taping, interviewing, speaking, and you get to meet my team too. I'm going to have a lot of members of my team there, my partners and stuff like that. So if you want, definitely stop by. I really appreciate it. Say hello. Love to see you guys. So that's going to be Thursday, Friday. I'm leaving Thursday. It's Friday, Saturday, Sunday, and it should be really, really cool. A lot of fun. And yeah, hopefully we'll get to meet up and either grab a beer or just say hello and have some fun. It is Vegas. So, yeah, anybody who wants to go to that, if you booked your plane, a lot of people have already booked. It's Vegas. Again, you have to fly there, whatever. But you could get discounts. Just go to our website, CurzioResearch.com, and you'll be able to get 50% discounts off those tickets. So, guys, that's it for me. Questions, comments? For email me, frank@CurzioResearch.com. That's frank@CurzioResearch.com. And I'll see you guys tomorrow. Take care.